So yeah, in the next half hour or so, we're going to explore the subject of acquisitive growth. Before we get into the subject matter, guys, if you'd just like to introduce yourselves, the firms you represent, and your experience, I guess, of this subject matter, that would be great. Walid, do you want to go first?
Walid Fakhry, is it working? Hello?
Yep.
Walid Fakhry from ESO Capital. Our business just merged with ESO Capital, previously known as Core Capital. Lower mid-market growth investor, and historically I think our companies have done over 55 acquisitions as a portfolio, just growing, and it's an integral part of the business plans of every one of our businesses.
Marco Sodi with Volpi Capital, private equity fund focused on the lower mid-market, tech-enabled businesses, a combination of software, service, information and data across Northern Europe. We're, of course, growth investor and look for companies that help their customers with their productivity or improving their efficiencies. And we specifically focus in what we call pick your partner opportunities, where we partner with one of the founders or with management to build a company. Over the investment period, we've done a lot of buy and builds. So we look for not only organic growth, but acquisitive growth over the life of the investment.
Thanks.
Hi, I'm Kassai. I'm a partner at Inflexion Private Equity. Inflexion is a 2.25 billion sterling fund. We invest in the UK mid-market mainly, increasingly now going into Europe. And we invest across sectors, very focused on acquisitive growth. We've done, since inception, more than 160 bolt-on acquisitions for our portfolio. In the last 12 months only, we've done 65.
Great, thanks, Paul.
And I'm Simon Peat. I'm an investment director at Livingbridge. We are also a mid-market private equity investor. Our M&A ranges from traditional buy and builds. So I sit on the board of a business called Portman Dental, which has completed over 50 acquisitions since we invested 3 years ago, right the way through to big transformational M&A, where we'll more than double the size of the business in one acquisition and everything in between.
Great, thank you. Quick reminder, if you want to send a question in, use Slido. I can pick these up a little bit later in the session. So, yeah, perhaps starting with yourself, Walid. In your experience, therefore, when at the point of making the investment, is an acquisitive growth or a buy and build story, typically going to form part of the growth plan and how you would achieve the value creation?
I think in most cases it has to. Let's just bring this up. Yeah, in most cases it has to in the UK. Most of the companies, if you want to achieve the returns that are going to be commensurate with the prices you're paying, you need to see real top line and EBITDA growth. And it's pretty hard in the current environment to really do 30%, 40% growth organically. The flip side of it is if the company itself is not delivering strong organic growth, marrying it in with another acquisition doesn't really deliver the right returns. So when we look at a business, we say, okay, look at value proposition, look at core competence, look at the management team capabilities, and really work with them on what do you need to prepare for those acquisitions? What do they look like? We also push them on actually lining up a number of them that we can evaluate prior to doing a completion. Now, in most of the mid-market buyouts today, investors don't get a lot of time with management teams in auction processes. We tend to try to find situations where we can spend time with the management teams, approaching the market, finding the industrial logic behind each and every acquisition. And then that the management team has a clear vision for what they're trying to achieve. And you can break down the acquisitions, in a variety of ways. Is the business from where it's starting looking at adding capability? So it's a skill set, it's a technical competency, it's an accreditation. Those make industrial logic. The ones we don't really typically like to support early on is the scale acquisitions. I think the scale acquisitions you tend to leave till the back end of the investment plan.
More incremental.
Well, not even more incremental. They can be sizable. You can add, let's say, 30, 40, 50% revenue
Yeah.
in the last acquisition right prior to exit. But by that point in time, the systems of the company are able to handle integration, they're able to handle something of volume. And keeping in mind that the last acquisition, when you buy it and it's buying you scale, if you're trying to sell the business at you bought it at a certain multiple and you're trying to arb it out on an exit, your investors aren't going to give you a huge amount of credit for that. They're not going to give you the full markup on the EBITDA because probably did it too close to the end of an acquisition. But the early ones that have added to the value of the business, either in capabilities or competencies or accreditations, or actually even in some cases geographies, those actually do add a lot of value. So yes, it's
part
at
of the
entry.
plan. Yeah. Marco?
I think it really depends on the strategy. First of all, we look for management teams that already have the experience, and often we need to complement a platform management team if they don't have the skill sets. But to grow a business organically and to do acquisitions on top successfully is a more rare skill sets that you find in lower sized companies in the UK and across Europe. So we spend a lot of time making sure that the skill set is there and the experience is there before the execution. And very often in part of the due diligence process, make sure that a lot of the add-on acquisition opportunities are real. Because if the company obviously has already executed several, chances are that they have a pipeline of further add-on acquisitions that they've been working on. But if they haven't done it before, that adds a significant risk to the execution of that. There's obviously different type of add-on acquisition strategies. One is, same products, same market, which tend to be lower risk. Because we focus on the B2B side, very often the markets are fragmented. So within even a country, big country like Germany, you can consolidate within one sector. And those are execution-wise and risk-wise are easier. The more complicated ones is when you're starting to add products or services or new products or services to the existing platform, or if you're expanding internationally, we tend to shy away from the combination of those two. So don't try to do new, but at least have one common knowledge. And we also shy away very much from transformative acquisitions. So we like add-on acquisitions that are 10-15% of the platform companies. But we find that transformative larger acquisitions of doubling the size of a company adds the risk profile significantly in terms of people issues, integration issues. So we shy away from those.
Yeah, subject matter I'm sure we're going to come back to as well in terms of integration, etc. Flor?
In our case, yes, M&A is a core part of our strategy. I mean, it clearly doesn't fit every business that we invest in, but there's a subgroup. And I think on average across our portfolio, 50% of our companies will do M&A. Okay. And we have a variety of how intense that M&A activity is. There's a couple of roll-ups. We have Succession, there is a roll-up of IFAs, or Medivet is a roll-up of vet practices. And in those cases, they're doing M&A on a monthly, if not on a weekly basis. And then for the remainder of that 50%, I would say on average we do 2 to 3 acquisitions. We try to do them. Most of these acquisitions have been done in the first year after doing the main platform deal, because we want to very quickly build that scale and start to create that momentum in the business. And in our case, for example, although it would be ideal to have a management team that already has that M&A experience and that has identified targets, I would say in my personal experience, the deals that I've done, where I've done M&A, most of the teams have not had that prior experience. I don't think that is particularly an issue. What is super important to me is that we are on the same wavelength, so that we all agree that M&A is a path, because what would be wrong? I mean, you cannot do M&A without a team that wants to do the M&A and you're in sync. But so long as that is in agreement, I think that's the area where we can help, which is, okay, let's sit down and analyze what are the criteria that you want to achieve, that you're looking for in these bolt-on acquisitions. Then, because we have a big team at Inflexion, we can provide the resource to map out markets and then identify those acquisitions. And so that then we can help them in the execution of that first or second acquisition. And then what happens over time, in my experience, is that the first one we typically lead if the team doesn't have the experience. The second one they lead and we support. And by the time we get to the third one, they're doing it themselves and they've built in that M&A engine.
Yeah. Simon, just to finish off on this.
Yeah, so just building on what other people have said, really, it depends. So on the way in, many investments we'll be backing will be around organic growth. And if you can get that right, and can continue it through the whole period, and it's very visible for the next buyer, so that's very valuable. And there's an opportunity cost around making acquisitions that will probably impinge on that ability to grow organically as fast as you would otherwise. So that has to be taken into account. But then if there is an M&A opportunity, either in the core value strategy within a buy and build, or which can take a business already doing something and step change it to another level, either by just increasing scale or by adding product, service, international growth, then that can be very value accretive, and we challenge ourselves on the way and to think those through in detail to map out how we might be able to bridge that kind of upside return.
Yeah. Well, Flo's touched on an area I wanted to just dive into and explore a bit. So at the point of investment, you're right, management experience, which is, you know, the execution risk, but also then tackling the integration risk that comes with this. Is that, in your experience again, is that something you look for a management team to have evidence and experience of, or is it's something you can supplement? And also with target acquisition identification, how's the collaboration and the input there? Flo, if you just want to pick that up again. And
yes, so in our case, again, in an ideal scenario, you have a team that has done it before and that knows exactly what they want to buy, and there they go. But the reality, in my experience, has been very different, which is you find teams that historically have not had the financial resources to buy, or the bandwidth to actually look at what is out there that we could potentially buy. And so when we get involved, as I said before, we help them map out, identify, and then typically the experience is not there, although it would be ideal for it to someone in the team to know how to do M&A, where are the potential pitfalls, and then how to do integration. Typically, as I said, it doesn't happen. So what we tend to do is support them on that first one. And the way we also help is, especially on the integration side, which tends to be the more complicated bit, is supporting them with a project manager. This is not a person that's going to be responsible for the M&A, because it's very clear that the management team leads the process and is responsible for the outcomes. But it's just to provide that extra bandwidth that the team may not have in terms of tracking the progress on the different integration work streams, spotting where the roadblocks are, flagging them very quickly to the exco so that they can act promptly, and just making the process more smoothly.
Yeah. And Simon, Portman Dental is a good example of scaling. So the ingredients in that management team, have you had to supplement or assist?
Yeah, so when doing a M&A at scale, and it's kind of an industrial process where we're doing 1 to 2 acquisitions every couple of weeks, need to have the team in place beyond the top level to be able to do that at a scalable way. So if the management team was having to do all those acquisitions, the management team would just be acquisition guys and wouldn't be building something bigger than just a collection of assets. So we've had to put in a full M&A function into that business, which covers sourcing, the M&A process, but then just as importantly, the integration of those individual dental practices. Because any scalable growth, you need to put the infrastructure in place to be able to deliver it, and M&A is no exception.
Yeah. Marco, do you want to add to that?
Yes, I think if the plan is to do 2 or 3 add-on acquisitions per year, for example, I think there's no question that management has to build a separate M&A function to help with origination, to help with planning the integration, and financing some of the acquisitions as much as possible. We like to use debt for all the obvious reasons, and lean on financial institutions to help us finance those whenever possible.
Yeah.
Having a separate M&A function dedicated, also focused on HR integration. We've seen a lot of issues over the years on the IT side, where even when you're integrating a company that's doing or offering the same type of service or product, that some of the issues that show up a few months later on the IT side can be quite significant. So as much preparation as possible up front is done, and by definition you need a dedicated team, or at least people within the senior management team of the platform company focused on those integration issues.
And just picking up on integration, there are hard and soft aspects of integration. If we look at the hard aspects of, Marco's touched on technology, for instance, but finance as well. Speed is important in my experience. Walid, do you want to pick that up?
I mean, historically, if you look at where things have gone well for us and where they haven't gone well, where they've gone well is when you have had similar businesses with generally similar behaviors for, let's say, our business. Let's say in the US that we sold Allied, where we did, I think, 6 acquisitions in a matter of 12 months prior to selling that business. But the systems were running similar businesses, back office, generally procedures were the same. So the ability to integrate and consolidate was reasonably easy. We've had other situations where, we had a product business, let's say Kelway, which then acquired a services business, and the integration there took too long. It took about 12 months, and at the end we still couldn't integrate a services platform with a product platform. And we had to get external help. We actually had to build the whole FP&A, financial planning analysis element within the business to be able to extract, reconcile the product and the services business. Again, it's going to be the similarities of these companies. The IT then becomes easier because the behaviors are not changing very much. But if you have very dissimilar businesses, going back to Marco's approach, so if you're trying to buy a US business and you've got a UK platform, I would argue that you probably, leave some of the IT systems there until you've gotten the culture, you've gotten the softer elements aligned, the procedures, so in terms of how people are selling, you got the product alignment right, then you can start integrating some of the harder things.
Yeah.
Because, geographical distance makes things difficult. Diversity or distance from core product that you have also makes it difficult. So to me, it's really a balance of when you acquire something that is remote from what you're doing, that's either going to be transformational or quite stretched, there are issues that come with it. And you've got to be conscious of that on the day of the acquisition. Now, in terms of timing, I think you always want to try to push to do the integration as quickly as you can, but you got to pick which elements you want to integrate. Are you integrating the staff? Are you integrating the product line? Are you integrating sales functions? Are you integrating IT? And I think in my mind, actually, the front part of it is the most important, because once you've got the cultural integration, then the IT stuff can follow reasonably quickly thereafter.
And that needs a project manager, as Flora said, in your opinion. Would you agree with that, Marco? It needs to be planned, it needs to be owned within the business to make the integration
No question about it. Preparation, planning, and then execution. But one of the issues that, interestingly, that we've come across sometimes is on earnouts. That you structure some of these add-on acquisitions where the management team of the acquired company has an incentive to execute on their business plan. And of course, they're very much focused over the next year or two on delivering those numbers, and they don't really quite care about the integration issues. So sometimes, even though those are put in place for all the right reasons, they can backfire and slow down the integration process significantly.
We've got a question from Slido, so let me ask you this, guys. Which are the best and most efficient sources for identifying bolt-on opportunities in your experience? Have you any thoughts on whether sourcing internally versus company-led versus advisor-led is a better or more efficient process? Simon, do you want to take?
Well, look, they all have their merits, don't they? So company-led, a company we're buying will tend to have a series of industry contacts. They'll know the businesses that are in and around their markets, and they will probably have relationships with the teams who they'll be buying. And so there is an opportunity to tap that network. Clearly, there's a big advisory network out there who are often preparing businesses better than might be if we were sourcing them ourselves, and so there's less transaction risk involved. But of course, there's the competitive dynamics of an advisor leading that process, which will go to pricing. And then direct sourcing is, I guess, the holy grail if you can get it right, because you can define your criteria, you can find exactly what you're looking for. You probably don't have that competitive dynamic, and you have the time to build a relationship with the team and get into the business and work out some of these questions about how we're going to integrate it. But I think you have to be pragmatic and know that there's different ways to source acquisitions.
Yeah. Flor, do you want to pick that one up as well?
I would say I personally have done a lot of deals in the trust and fund administration sector. So in my case, I had a big network that in the different deals that I've done over the years, I've actually introduced bolt-on acquisitions for San Group, which is now listed, and Ocorian, which is the one we're currently invested in. But as we started to go away from continental Europe and the UK, and Channel Islands, where my network was, I had to rely more on external advisors because, just my network was drying up there.
Yeah. I mean, a management team that really knows their marketplace and their sector should be the best source of identifying, future opportunities and targets by talking to the founders or management teams of those businesses, I guess, isn't it?
Yeah, but most of the management teams, I mean, let's be honest, they're focused on their day-to-day business, right?
Yeah.
They are focused on growing their business, on organic growth. When you come to them, you're saying, okay, let's do an acquisition-led business. The first thing they look at you, they're saying, how? And they get nervous, and you have to basically guide them through the first one. So we always think of the first acquisition sort of as the milk run. Let's do something small. Let's make all the mistakes we need to make. Let's learn from it. And once you've done that, it's not at a risk to the business, but it can help you grow. But then from there, the transition to, I think the rate of acquisition makes a huge difference. So when you're looking at acquisition in dental, where you're doing one every 2 weeks, it's a very different game. It is really an M&A business. It's an M&A-led growth versus an organic-like growth where you're bringing in other competencies into the business is a different type of growth. The industrial logic there is not scale. The industrial logic there is capacity and skill set and competencies. Yeah. So I go back to it, it's a different thing. So on the smaller end, when you're looking for those things, I think management teams need to know what they're looking for. Advisors can't really help them because it's a very specific niche set. But when you're looking for much larger, quicker growth like that, you may need outsourcing of it. There may be other tools. We haven't really gone into that territory as much as you guys have.
Yeah. If we can come back to the softer aspects, so people, but also importantly culture. Particularly if it's a very regular habit of acquiring. How does the company's culture, and how do you take the people, the communication with you in that kind of environment? Flor, do you want to take that one first?
Yes, so typically, let's take the case of Accorian, because they've done now 4 acquisitions, one very big one in the last 18 months. And what they've done systematically is the executive committee will go on day 1 after the acquisition has been announced to meet with as much as possible, the entire employee base of the acquired entity. And the key is to sell the vision, to say to these employees who are nervous, who are uncertain about what's going on, this is why this is great for you, this is what it means to you, and this is why you're much better off now as part of a bigger group in terms of career path, in terms of what we're building as a group than standalone. I think from there, they go into trying to do smaller focus groups, especially with the senior people, because a bigger forum en masse is very difficult for people to really ask questions and ask the things that really concern them. But in smaller focus groups, you find out people tend to open up more and to be able to express some of the areas of concern and tackle those. And then we have also a very targeted approach to people that we are absolutely sure that we want to keep, but clearly they will be a bit unsettled by the news. HR communication and specific communication to them saying, look, we see you as absolutely critical to the future of the business. We want you to, we see you part of the bigger picture. We want you to stay involved. And what we always try to do as well is make sure that the management team, as much as possible, is part of the shareholding group. So give shares, sweet equity into some of these key people very quickly, also as a means to retention. So I think those are mainly the areas that we work on.
Marco?
Well, clearly culture is important, critical factor when you're first acquiring the platform company, making sure that you're comfortable and they're comfortable with also your culture as a GP. But on add-on acquisitions, it becomes critically important, again, when you're internationalizing a business, especially if you're going across languages. We focus only on the B2B sector, so English is pretty much the de facto standard. But even going to the US from the UK, as we know, there's a common language, but it's a very different culture. So if you are executing a buy and build strategy in Germany and expanding in the Netherlands or in Finland and in Nordics, then culture and getting that right for add-on acquisitions is very important, and that's a due diligence process.
Yeah.
Both at the board level, but clearly at the management level.
It needs the same amount of focus as the harder aspects.
No question.
Yeah, and it is frequently the piece that is forgotten in my experience. Yeah. Simon, anything you'd want to add on that?
Yeah, it's no different to when Livingbridge make a brand new investment. That there's a lot of people in that business who are thinking, who are these guys and what does it mean for me? And part of our job and a part of a business acquiring another business in an M&A strategy is to allay those fears, build on the culture that they're acquiring, and as Flor says, sell the dream and paint that vision, because people want to know how they fit in, why it's happened, and what it's going to mean for them. So that's pretty key.
Yeah. So a lot of the strategic rationale we've looked at so far is about scaling and incremental. When we think about a more transformational acquisition, it's often new markets, new territories. And Marky, you were just beginning to touch about international. So cultural differences is one of the issues you've got to have on your radar if you're acquiring further afield. Risk and opportunity, therefore, in your opinion, as a management team or at the stage of evolution for that business in taking that step, what would your advice be? Well,
I would, one of the best benchmarks is to use customers of the business. Yeah. Are the customers asking for the internationalization of the business? In your example, clearly that industry is internationalizing significantly on the fund admin side, and so that's a very good example of customer-led international expansion. But again, finding the opportunities, usually the platform company management team doesn't have the experience on the international side. So that, I think, is one of the areas where as a GP you really have to lend a lot more resources and time spending with the management team to help them with that.
Yeah. Walid?
I think the transformational acquisitions for me are always a concerning one because they can easily transform a good business into a bad business, and they can't disrupt it, right? When we look at acquisitions when they're not really core and very clear justification, and we get concerned about trying to find justification for doing something where little justification exists. That's really the biggest concern for us because you really can stretch. You can say we're chasing our customers, but you have enough of a big market that you have untapped. Why are you doing this? So when acquisitions are done for the right reasons, and you really have conviction that those are the right reasons that are going to add value to your business, then they typically go well. When the rationale for them becomes more and more tenuous and you have more and more dependencies on things happening in the future for this to be valuable, then I think these tend to be probably the ones you should walk away from.
Yeah. Flor, you've got experience, so that sector and market was ripe, wasn't it?
Yeah.
For internationalization, but it won't work in every sector or situation.
No, and I think in my case, what I focus on most, especially the further away we go from the UK, where our management team is based, is the quality of the local management team, because we clearly we're not going to be able to be there all the time. At the beginning, we fly on a more regular basis, but eventually you want that business to be independent, although to follow the procedures and the way of working of the headquarters. And so we focus a lot of our time and attention during diligence with that management team and saying, are these people that can run this business and that we trust? And then, as I said before, we make them shareholders in the group as well, so we're fully aligned also.
It's managing that business at a distance as well.
Yeah.
There are no, I can't see any other questions on Slido, so let me ask a final wrap-up question and just quick pieces of advice, really. What are the pitfalls and things that management teams should be thinking about when they start out on a buy and build or acquisitive journey? Simon, start with you at that end.
So buying businesses is really quite straightforward, but knowing what you're creating as a group is much more difficult. So spending time thinking that through, articulating why you're making that acquisition, and then all the stuff around integration on the back end is where it's worth spending the time rather than worrying about how do I actually transact this thing.
Yeah, purpose, yeah. Flor?
From my end, I would say start the integration planning while you're doing, at the same time you're doing the execution. And it's a very important part of the process. And as Simon says, it's not just deal completion. Deal completion is just the beginning of a very complex process that comes later. And unless you're well prepared and know what you're going to do, the chances are you're going to fail. So that integration process, that planning process during execution is super important.
Yeah. Marco?
Shy away from transformative acquisitions. And focus still on delivering your organic growth, because that's your priority number one. I think add-on acquisition strategy, it should be additive to your organic growth, so don't lose track of your main objective.
Yeah. And finally, Walid.
And I think on our side, just really make sure you know the KPIs you need to be tracking to determine whether this is a good or bad acquisitions, because once you've done the acquisition, suddenly it goes into the overall company P&L, and you lose track of whether, if you're asked the question later on, was this a good deal or a bad deal? If you don't know the answer to that, then that's a problem, because we can see some situations where you can hide problems by doing acquisitions, and that's not really a great scenario.
Okay. I'll bring that to a conclusion. My thanks to Walid, Marco, Flor, and Simon. Thank you.